I think it's mega caps. I think mega caps really are the story right now. Yes, you pointed out the election. We're in the middle of a gridlock rally. On the other side of that, we're going to find out where we are with inflation. But really, where the market goes right now is going to be determined by the way that these mega caps ultimately going to trade. And I think in the last...
Think so?
I think in the last several days...
You don't think the market's decoupled itself from them a little bit?
No, and I think in the last several days, we're finally seeing that the resiliency that the market had with mega caps, that's kind of beginning to fall to the side. You've seen a little bit of a liquidation. There was some false comfort this morning that maybe mega caps would be okay today, that we wouldn't see the selling pressure. Okay, you're seeing the selling pressure right now, and you're beginning to see the deterioration in the indexes overall. So I think two things haven't happened. Number one, you haven't taken away the stress and potential liquidity concerns from the fixed income market. Still have a 2-year treasury at 475, and you haven't taken away this process of tax loss selling for mega cap equities. And that ultimately, I think, determines where the market goes.
That's the Gundlach point of view, right? He's told me out in Denver the biggest risk between now and the end of the year is tax loss selling. So Joe's essentially saying that the market can't get stability or continue to go up if mega caps don't go up. Do you agree with that?
No. And I think we're seeing it because you've seen the market rally. You're seeing Apple down today. How many conversations have we had over the last 5-6 years? Market can't go up unless Apple goes up. And here we have Apple down, 15% from the highs just in the last couple of weeks. And we've seen carnage and in the mega caps. So I actually think it's healthy to have the market divorced from mega caps. But I think the challenges are different in the market. And first, I want to commend Barry Diller for being such a huge fan of Halftime Report, because he said everything I've been saying over the last, few months. Look, the issue is going to be that it's going to be huge volatility as we go through into the first quarter, because maybe you get a hint of CPI getting a little better. I don't know if you will or not. You'll see the market have a massive rally. Then you'll come to December, and Powell will go 50, but it'll be still hawkish.
Will he? I mean, if CPI comes in line, if CPI comes in anything but hot,
right, you get a rally.
We do.
Right, you get a rally.
On the back of the midterm,
right,
which some suggest we're already rallying into it on expectations of a flip of the House.
Look, we went into gridlock when Joe Manchin called out Biden about pushing green windmills instead of coal. So he's always been the swing vote. So Biden wasn't going to get anything done anymore, and he shouldn't get anything inflationary done anymore. So you're already in gridlock, and I've already think you've seen that rally. It may pop tomorrow night, but I think it'll sell off quickly as you de-risk into CPI. So then it's going to be a question. The market's going to be very data dependent going forward. I still take the view that earnings are going to come down. They haven't come down enough in terms of forecasts. We heard Dubrovko has got an excellent sense of the market, is a phenomenal strategist. Costin, again, taking his numbers down today.
He did. Costin from Goldman took his estimates for next year down to zero.
Right. But you have to break through that, because earnings are actually down if you break out energy this past quarter. And that's going to continue to be the trend. So I still think the market is overvalued here based upon where earnings are going to be, not where they are today.
So, Victoria, UBS says the lows aren't in, and they're looking at the S&P. They say 3,200 before 3,900. Does that make sense to you? Yeah. You've been more negative for certain.
I mean, the downturn's intact. It's still a bear market. We've had about 4 of these rallies where we come up anywhere from 5 to 15%. But if you look at it, we keep hitting lower highs and lower lows. So no, I don't think it's invalidated at all. I've always said 3,200, I think is where we're going to find our footing. Probably in Q1, you could see a little bit of a seasonal rally here, but earnings haven't necessarily been great. As we pointed out, X Energy, it's a little bit of a loss. And then you're seeing your mega caps fall off, which again, I think it's funny. It's like you have to define when you're talking about the market. It's not universally the S&P 500 anymore because they're so cap weighted. If you look at the market as the Dow, which again is more value and very concentrated, you've actually seen a bunch of positive weeks before we saw last week's heartache. But the Dow and the disconnect between that and the very mega cap weighted S&P 500, I kind of push back. Now we have to be rethinking when you say I want to invest in the market or not. What do you really mean by that? Because the SPY, IVV, throw a dart at a dartboard because you've got those 5 mega cap names. it's really not the same anymore. But we needed to see that. We needed capitulation. We'll see if Apple can hold that 121 support from the June lows. Reports today on the iPhone cutting, is definitely dragging them down. And you just can't, the mega caps just can't seem to get it right now. And so I'm willing to wait until we're done with our rate hiking cycle before I get excited about them. So yeah, bear market still intact, not getting too excited, happy for some Marie Valley, but it's not the end.
Yeah.